Welcome back to the channel, everyone. Today I want to talk about the institution that's using a crazy 133 times leverage on $183 trillion. Also, in yesterday's video, I taught you how you can sign up for the AMC NFT, but today I want to give you a tutorial on how you can create the wallet in order to keep and hold and potentially sell the NFT. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Nazim tweeted saying, look what I found. Almost $183 trillion worth of derivative contracts open, and Goldman Sachs are being leveraged 133 times to 1. So you can see from this screenshot that it's measured in millions of dollars. Therefore, Goldman Sachs have $351 billion in total assets, but a whopping $47 trillion worth of total derivatives. That means that Goldman Sachs have leveraged themselves by 133 times to 1 to use their $350 billion in order to get that $47 trillion worth of derivatives. Now, these derivatives are mostly over-the-counter swaps, maybe they're interest rate swaps or total return swaps, but also they have a very, very large amount of options as well. Goldman Sachs hold around $12 trillion worth of options, which is more than JP Chase and more than any other bank and institution on this list. Now, something I also find very, very interesting is that Goldman Sachs haven't really hedged this position either. Their total credit derivatives, like credit default swaps, is only $175 billion, substantially lower than JP Morgan's $1 trillion. Now, it's also very interesting to see that pretty much every single institution on this list is very heavily leveraged. Even though Goldman Sachs have the largest amount of leverage, it's still interesting to see that Citibank also have a lot of leverage, so to JP Morgan, so to Bank of America, and pretty much every other bank on this list, or at least in the top 5 or top 6 banks. Some of these smaller banks from number 11 onwards actually have more total assets than they have in total derivatives. They're obviously not as active in the derivative market and also prefer to have a lower leverage. Now you might say, well, Tom, if Goldman Sachs have a leverage ratio of 133 to 1, doesn't that mean that the S&P 500 only needs to drop by, say, 0.8% or 0.7% for their entire portfolio to be liquidated? Now, obviously, that is an interesting question, and I think the answer is because a lot of their positions aren't necessarily derivatives on stocks. They're derivatives like interest rate swaps, which typically don't move up and down a large percentage. However, regardless of that, I do think they are still very, very heavily leveraged on their stock and options positions. Therefore, I don't think the market would need to fall by a large amount for Goldman Sachs to potentially be liquidated. They're definitely at risk of being the first institution or first bank to be liquidated because of how high their leverage ratios actually are. But ultimately, I think the reason why they haven't been liquidated yet is because they don't have 100% of their capital and margin invested. Therefore, if the S&P 500 does fall, they can take advantage of that and buy the dip and average down their position a little bit more, rather than just being straight up liquidated. Moomoo are currently giving away an iPhone 13 Pro every single day this month, on top of a number of other goodies, on top of those 5 free stocks valued up to $17,500. When you open an account on Moomoo and deposit at least $100, you'll be eligible every single day this month to win an iPhone 13 Pro, an Oculus Quest 2, or shares in GoPro. But not only that, but you also get 5 free shares valued up to $3,500 each. One for opening your account, one for depositing any amount, even if it's only a single dollar, and the final 3 remaining free shares for depositing at least $2,000. So that's potentially up to $17,500 and an iPhone 13 Pro just for opening a Moomoo account and making your first deposit, linked in the description below. Now, I also wanted to pick out something specific in Adam Aron's recent tweet. Obviously, as my video yesterday discussed, Adam Aron tweeted this. Given AMC Spider-Man NFT success, our first ever NFT, I'm thrilled to announce our second ever NFT. All self-identified AMC shareholders who are a member of AMC Investor Connect and those who enroll by December 31st will get this handsome NFT for free, one per member. Now, interestingly, it's the use of this word self-identified AMC shareholders. So AMC haven't just approached some brokers and asked for a list of customers that are currently holding AMC. Because obviously that would leave AMC up to manipulation. The brokers could provide AMC a list that's incomplete and doesn't contain nearly anywhere close to all of the people and those shareholders that do actually hold AMC. I think when Adam Aron's been told in the past that around 4 million individuals hold AMC, this is obviously a figure that comes from a different source. Maybe it's a consolidated figure from a number of different brokers, but it leaves it up to manipulation and could potentially be edited, and a full list may not be provided to Adam Aron. This way it lets us self-identify ourselves to the AMC Investor Connect platform. Adam Aron isn't getting a list from a third party, and importantly, he's not limiting the creation of these NFTs to 4 million users or the current 425,000 people that are currently registered to AMC's Investor Connect. Because obviously if Adam Aron limited the number of NFTs to say 4 million NFTs, that can mean there's tons and tons of people that end up missing out on those NFTs if they've become a shareholder recently or if the brokers manipulated that list that they provided to Adam Aron. So this way, Adam Aron will know once and for all just how many shareholders there are in AMC if everyone signs up to the Investor Connect platform. So again, just another brilliant way for Adam Aron to figure out if these brokers have been lying to him on how many AMC shareholders there really are. Now, I also wanted to give you a bit of a tutorial on how you can set up a Wax wallet. So obviously I'll link this post down in the description below as it gives you a video on how to set up a Wax cloud wallet, which will store your assets digitally on a cloud-based server. However, if you're not comfortable with keeping your assets in the cloud, there's a separate link to another page which will show you how to create a Wax wallet that stores your assets locally on your own device, whether it's a phone or your computer or your Mac or whatever it is that you're using. Both options have their pros and cons, and you don't have to choose one or the other. You can have multiple wallets. You may know that I personally use BlockFi, and therefore my cryptocurrency is stored in the cloud, and therefore I'll probably set up a Wax cloud wallet for my AMC NFT. Now, I also wanted to cover some new Ortex data, looking at the days to cover and the estimated short interest percent of free float. We can see that over the last week or two, the days to cover has absolutely skyrocketed. This is obviously because volume is low and those shorts haven't been covered, and therefore those shorts are getting older and older and taking longer to cover because there's less volume. But on top of this, the estimated short interest percent of free float is also on the rise again. I've noticed something quite interesting. Before AMC runs up, you obviously have a bit of a spike in this estimated short interest. When AMC runs up, it obviously pulls back. The estimated short interest was obviously then building up again as the AMC price was moving back upwards, and again, as the AMC price started moving downwards, that short interest percent moved back downwards as well. The short interest percent was then building again as the AMC price was also building up to this $56 region, and then obviously experienced another pullback. Now I think we're on that build again, and I do think we'll be on our way to setting a new all-time high in short interest percentage. And obviously, in line with history, I do also expect the AMC price to turn around and start increasing again as this estimated short interest percent increases and sets a new all-time high. Now, I also wanted to talk about Citadel and their investor withdrawal restrictions. If you didn't already know, Bernie Madoff also discouraged his investors from making withdrawals as well. Just saying. Bernie Madoff also created payment for order flow, which Ken Griffin and Citadel are big advocates of. I do think it is very, very interesting just how many similarities there really are between Ken Griffin and Citadel and Bernie Madoff. Now, obviously you'll know that Al from Boston suggested that many AMC investors should go to Citadel's LinkedIn page and leave a number of comments to let Citadel investors know what's really happening with their money. As a result, we've seen a massive spike in the search term for Citadel securities and massive increases in search volume in interestingly related topics. We've got some massive increases in search volume for systemic risk, for Citadel Securities Twitter, and also for market liquidity and overall risk as well. I think many new searchers, potentially those Citadel investors, are seeing what's going on the Citadel LinkedIn page and are doing more research on the current market conditions and current systemic risk. This is obviously going to be off-putting investors and causing them to want to withdraw their cash from Citadel. Obviously, Citadel have tried to limit withdrawals, but investors can still get their cash out if they're willing to pay a fee. Now, I do think for those investors, it's probably a good idea. Better to take your cash out and pay a fee than it is to potentially lose it all if and when Citadel get liquidated and go bankrupt. And finally, I also have a Loopring update as well. Andrew Kang from Citadel recently tweeted about Loopring. Interestingly, Andrew is actually followed by Loopring as well. Back in November, he tweeted saying ZK Layer 2, which is obviously what Loopring uses, hashtag GameStop, and said it's a trifecta of narratives, with obviously the Loopring hashtag in there as well. And yesterday afternoon, he tweeted saying that this week is going to be a big week. Maybe this is the week that Loopring and GameStop formally announce their partnership and release their NFT platform. If this is the week when Loopring and GameStop announce their NFT platform, I do think that the Loopring coin will be hitting new all-time highs, and I do think the GameStop stock will also be on its way upwards as well. Ultimately, I think this is a very, very good sign. It doesn't matter whether AMC squeezes first, causing GameStop to squeeze, or it doesn't matter if GameStop squeezes first, causing AMC to squeeze, because effectively they'll squeeze each other, as many institutions are shorting both. Ultimately, this could be the catalyst that GameStop needs in order to start the GameStop squeeze. Guys, be sure to let me know down in the comments below what you think about the massive amount of leverage that's currently being utilised by Goldman Sachs on such a large volume of money like $183 trillion. And also, if you want to stay up to date with my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.